The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Thursday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading. Quite a negative day in the markets yesterday. S&P's, NASDAQ, biggest down day since 2022. It's 2024. It was quite a deceleration in the markets, all on the heels of some pretty decent numbers from Alphabet, Tesla, YouTube revenue, not what the market wanted to see. Advertising revenue, maybe indicative of a little bit of a slowdown. AI, not delivering the results the market wanted just yet. Nonetheless, keep your spikes up, folks, as that was not a disaster earnings session from Alphabet, and the market penalizing them dearly as we trade down dramatically. There's your trade down yesterday on the daily to 174.37. I mean, you just lost 10% in Google shares over a period of 2 weeks, just like that. That is how quickly this market can move, man. And this morning, we're off a little bit as well. We're off another dollar to 173.41 right now. You see the volatility on their earnings. You opened yesterday at about 175, a brief spike before the market gives it up across the board. This morning, though, S&P is basically flat, trading at 54.71 right now. You got the NASDAQ 100 slightly in the green. We're up by 15 points at 19,214. Dow right now up 30 points, 40,136. And the Russell up by 6 this morning, 22.21. Bitcoin pulling back a bit. Quite the acceleration last night to lower prices. We're trading at 64,090. Ethereum, so often, right? Buy the rumor, sell the news. You trade up into that. Ethereum ETFs go live, and the market pulls back a bit, but it pulls back with the market in terms of the indices. Ethereum off by 6.6%. How about crude, man? If you haven't filled up the gas tank, just wait if you can. Lower gas prices coming at you. We got crude down $1.35 with a 76 handle. Not bad, man. 76.25. I was saying I filled up my gas tank about 2 days ago. $3.15. Pretty remarkable. We're flirting with a 2 handle with the price of a gallon of gas, where everything else is when you talk about where that is for the dollar equivalent, right? In terms of everything else being priced so high. And meanwhile, we got a gallon of gas flirting with almost $3 right now, as crude is trading at 76.35. You talk about volatility, right? We're trading at $72 in the beginning of June. You trade all the way up to 84.52, and that was just, 20 days ago? Yeah, 20 days ago exactly. And right now we're back to 76.34 in the price of crude. You jump down to that gold contract, it's quite a pullback. We got gold down $45 this morning. Now, we got some GDP news out there. Gold with a pullback yesterday, continuing that pullback today. We hit a low of 23.62. We're trading at 23.70. Gold giving up more than $100 from where we were. You got to back it up a little bit more than that. When was that? 8 days ago. 24.88 down to 23.77. You take a look at this thing on a daily basis. You know, you might be back down to $2,300. That's the bottom of the range that we've been trading in right there. And we'll see where we go. But gold now $45. We jump over to the dollar index. Not really a huge move. Considering the move we had, yeah, you got a little bit of a pop, right? But we're right back to where we were the close yesterday. We're right back to almost the beginning of the day yesterday as well. 104.40. We're up by basically a penny in the dollar index at 104.40 right now. And you jump to notes and bonds, and as I said, we're going to go over GDP data. Very strong GDP data this morning, market reacting. We got the 10-year right now, up about 6 ticks. We were all the way to 111.08. We're trading right now at 110.28 right now. You got the 10-year yield at 4.25%, 4.25. 4.25%, the yield on the 10-year. as we are now, 6 days out from a Fed meeting. Next Wednesday, they make their announcement, July 31st. All indications are, what are they going to say for the September meeting? Coming down the line, but nonetheless, 4.25% on a 10-year basis right now on that 10-year. You know, it is interesting. We talk about, remember I used to bring up the 5-year ladder, right? What we're talking about for CD rates, okay? And the 5-year ladder we're talking about right now is at about 4.5%. 4.5%, that 5-year ladder. Yeah, and that's correlating to the 1 years at about 4.9, okay? And then you're looking at 4.5 for the 2-year, 4.45 for the 3-year, 4.3, and 4.3 for the 4-year and the 5-year. Interesting. 4.5, not a bad CD rate when you're talking about guaranteed, where the market is, depending on what your investment landscape looks like, right? 4.5%, not a guaranteed interest, not a bad guaranteed rate of return right now, especially, man, if you rode this market up to any dramatic degree, because be careful. You know, longer term, yeah, market's going to be fine. This is not a 2000 dot-com bubble, okay? But shorter term, we just ran, I mean, you want to just context, perspective is important, okay? The NASDAQ just traded from 14,000 to 21,000. You just traded up 50% over a period of 9 months. Bonkers. And to make things even a little bit more, the NASDAQ just doubled in price over a period of a year and a half. So yes, folks, shorter term, okay, there's nothing saying, I mean, let's take this one off for a second. Context is important. If you're not willing to take the heat, get out of the kitchen, right? A 382 just brings us back to the lows of April. That's not outlandish at all. All right, and it is interesting that that low is 17,000, which is pretty close to the highs back there of 2021. Right? Might be the area we're going to, and that is another, yeah, that's another 10% from where we're trading at right now. Yeah, a little bit more than that. 17,000 from 19,000 to 11 from where that is. So, all right, jumping over to those numbers, the U.S. economy. Now, this one's interesting, right? All the talk is slowdown. Well, not so much. How about 2.8%, man? GDP increased at a 2.8% annualized rate after rising just 1.4% in the previous quarter. It blows away all the estimates. GDP, 2.8 versus an estimate of 2. Personal consumption, 2.3 versus an estimate of 2. And the PCE price index, excluding food and energy, 2.9 versus 2.7. A closely watched measure of the underlying inflation, PCE, 2.9 versus 2.7. Yeah, how do you calm all those numbers, right? We got growth, dramatic. We got price indexes rising more than the market thought, and we got personal consumption above where the market thought it was going to be as well. Pretty remarkable, man. And you take a look at that on a graphical interface, 2.8, a big spike from where we were a quarter ago. You see where we were in September last year, man, 4.9, 3.4, 1.4, but boy, we got a spike, 2.8 coming in for the quarter. Be interesting to see what Chairman Powell has to say coming up 6 days from right now. He'll get some questions over that number for sure. All right, folks, we got a lot to talk about. We got Southwest. What do we got? We got a lot of earnings, man. We got American earnings. We got Keurig Dr. Pepper. We got Berkshire selling some Bank of America. We got Disney with the biggest movie ever, Inside Out. We got a lot to talk about this morning. Stay tuned. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Tigers, it's back. The annual July Tiger Dollar Sale. If you've been wanting to try one of our products, from our stellar newsletters to educative webinars, now is the time. From now until August 1st, we're offering a 20, 30, even a 40% bonus on Tiger Dollar purchases. After being applied to your account, your Tiger Dollars will be used for all purchases. They can be easily transferred, and they never expire. If you want to receive a 20, 30, or even a 40% bonus from purchasing Tiger Dollars, now is your chance. This is a perfect opportunity to try out a newsletter or save big on your current subscription. This deal is only available until August 1st, so lock in your bonuses fast. Go to TFNN.com today to lock in your bonus. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps right now up by 1 point. NASDAQ 100 up by 32. Dow barely in the red, and the Russell up by 10 points right now. It is interesting, right? You take a look at the weekly on some of these bars. You take a look at the monthly on some of these indices, and it adds some context. On a weekly basis, the Russell's in a positive bar, which is remarkable. I mean, you got some tail spikes in some previous bars out there, okay? You take a look at things on the S&P, though, not so much the case. Look at these weekly bars, right? You got a gap going from June 10th to June 17th. Haven't even filled that gap yet, okay? But then what is interesting, now we're going to be in the red, but for some context, doesn't even look like the pullback has began on a monthly basis, right? And it might not. I'm not saying the market's going to tank, but context is so important, right? We pull, those are the biggest market days down we've had since 2022. Meanwhile, they are barely registering on a monthly basis when you think about where this market has been, where it has gone, and what it's been doing. Now, I sent out an update for my subscribers earlier in the week, and these bars weren't even red yet. And already we had a bunch of turmoil, right? Weren't even red yet. Well, we got a little bit of a red monthly bar. Yeah. So keep that in mind as, if you're positioning yourself and you're not willing to take that heat, as I said, okay, be aware of how high we are in this market still. And it could just be a nice, healthy pullback to a certain degree. We will see. All right. Getting back to those GDP numbers briefly. Some of what they talk about here, okay, is that, yes, this is how Bloomberg puts it, even though the pace of the growth picked up from the first quarter, we went from 1.4 to 2.8, doubling the growth. The figures still represent a moderation from last year. Consumer spending and broader economic activity have cooled under the weight of high interest rates, which simultaneously helped tame inflation. That bodes well for the Fed, which is trying to pull off the soft landing, as they put it. Okay, now where is the growth breakdown? Consumer spending was driven mostly by a rebound in durable goods like cars and furnishings. Interesting, right? As well as a more moderate advance in service outlays compared to the first quarter. Government spending contributing more to GDP compared to the first 3 months, boosted by defense spending. So, maybe there's some impetus there where the Fed is time to cut if the only thing driving GDP, and I'm exaggerating, it's not the only, okay, but if one of the factors contributing is to GDP more so than the previous 3 months is defense spending. Residential investment subtracted from growth for the first time in a year as high mortgage rates kept a lid on sales activity and new construction. So there are signs there that I think September, unless we get some shocks, I don't think this one's going to put a hold on the Fed's plan potentially to begin that cutting in September. A separate report Thursday showed orders placed with U.S. factories for business equipment, excluding aircraft and defense, increased in June by the most since early last year, a sign such spending will keep adding to growth in the coming months. So as I said, the market, we may have some volatility coming down the line, but it is not indicative of anything like a dot-com bubble. But boy, be careful. When you get the NASDAQ doubling in price over a period of a year and a half, you better believe that you might take some hit. And a 3% pullback in a day is not substantial when you just made 100% in a year and a half. Those are the things you want to keep track of. All right. Yeah, we got a lot of different equities with news, and let's kick it off with Southwest. So what I found myself wondering this morning about Southwest is it too little too late? And that's where, you don't want to be reactive. You want to be proactive in many things in life, okay? And it feels like they're being reactive here instead of being proactive, as in, guess what? You're going to be able to pick your seat on Southwest. It's about time. Seems like that's one of the things we can all agree that nobody likes. Showing up to the gate, fingers crossed, saying, please don't screw me with my seat wherever I end up. Nobody likes uncertainty. The market doesn't like uncertainty. And for the longest time, Southwest, they were the low-budget carrier, right? Saving money. People were able to forego that convenience of picking their seats for the ability to save money. They don't really save money on Southwest anymore. They're not undercutting like they used to. And as a result, the business plan is changing. And you're going to be able to pick your seat on Southwest now as they make that substantial change. And where are we? I think they're one of these headlines. Are they not? Maybe I was just reading them and I closed it out. All right, I'll have to find that one. But yes, shame on me. Where was that one? There it is. Well, we got two stories, as in this is what's interesting here. Is it too little, too late? Southwest profit falls 46% as airline takes urgent steps to increase revenue. They should have done this one before they had profits falling 46%. Now, airlines, they're facing some woes right now, okay? But nonetheless, they're going to start assigning seats and offering extra legroom products to increase sales. They're joining the party, man. Yeah, they're realizing probably. I mean, think how much other airlines are making by those extra legroom seats, all of that stuff, right? Think how much they get just for the ability to choose a seat now, right? You book a flight, you got to pay to choose a seat. That's an upgrade. Yeah, they're joining that party to try and increase revenue because they're in trouble, as opposed to doing that before you get headlines like profits falling 46%. So yes, I think that is a good change. But nonetheless, it's going to take some time because this is a reactive decision, not a proactive decision. The forecast an increase of as much as 13% in non-fuel costs for the third quarter. This is going to take some costs too. Earnings 58 versus 51. Revenue they slightly beat, but nonetheless, they're going to have to increase their costs to get this done. It's going to be quite an undertaking, and that was one of the things that they always talked about why they hadn't done it. It was going to be such a substantial change to everything that they do. And then you pull up this, which is the article for their seating. Yeah, they're going to get rid of open seating. They're going to offer extra legroom and the biggest shift in its history. Yeah, they're going to new cabin option next year. 53 years they've been around. Woo. 80% of its own customers prefer an assigned seat. Why did they wait so long then? Right? That's the big question probably as the stock. I mean, you take a look. That's going back a year. And look at this equity, man. Right? You have not made any money. Now, this is, I mean, I pulled this up on some of the other airlines. Since 2014, you're flat on Southwest. But guess what? Delta's got some problems. They're flat since 2014 as well. You jump over to American. You're in the loss no matter where you're into this equity on American. Pretty remarkable how much these airlines look like trash, man. And United, you're break even as far as you go back. Boy, if you're ever going to buy an airline, folks, don't buy it and hold it. You got to sell it. Look at that. You could have bought it at $2 and sold it at $100, but meanwhile, you're practically break even from where you were in 2006. Quite a run for the airlines from 2008 to where? Pre-COVID, basically. That is quite a chart when you look at United in terms of a lesson of buying and holding airlines. Not the case, folks. Remarkable. All right, what else we got? We got Ford. You talk about charts, man. Ford, break even since 1987. How about that one? Whew. Talk about diversification. Ford this morning, they're going to open down 15%. We'll talk about Ford when we get back. We're going to talk about Jeep, Stellantis as well. Stay tuned. We got a lot to talk about. We'll be right back.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Hi folks, this is Tom O'Brien. We have a market. Over the past year, the market has been consistent in a strong upward trajectory. But now we're just starting to see signs of volatility. Don't let this volatility scare you. Times like these are when big money can be made. That's why I'm excited to announce a live trading event hosted by yours truly. Join me on Friday, August 2nd at 9 a.m. all the way until noon Eastern Standard Time while I trade the S&P, the Qs, the NDX 100, and I'm going to be trading the one-day options on the S&P as well as the NDX. To make this deal even better, I'm offering 1 month free of my Market Insight newsletter, which has beaten the market by almost a factor of 5 this year, in addition to a signed copy of my book, The Art of Timing the Trade. On top of trading the market live, I'll discuss how I plan my trading day, what times I've found to be the best to trade, how I decide to enter and exit trades, and so much more. I can't wait to see all you folks there. Make sure you sign up soon so you can get early access to my Market Insights and secure your spot. Wow! Let's get them, folks.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. S&P's flat right now on the session. NASDAQ 100 positive by 7. Dow barely in the red, and the Russell positive by 4 right now. You jump over, as I mentioned. So we got Ford. Yeah, how about down 13.6% to kick off the trading session? And as I mentioned, we got a lot of headlines on individual equities kicking things off right now. And you jump it over, Ford shares tumbled 13% after a quote-unquote massive earnings miss, is as they put it here. And yeah, 47 cents versus 68 cents. They beat on revenue, but they do not beat on earnings, man. The guidance for the year includes adjusted earnings before interest of between 10 and 12 billion. And yeah, they increased their full-year target for free cash flow, but maintained its earnings guidance, disappointing some investors who had hoped for a hike in terms of where they were in guidance out there. Profitability was affected by its increases in its warranty reserves used to pay for vehicle issues. The costs are related to vehicles for the 2021 model year or older. What's going on with that, man? They got more costs for their vehicles in terms of warranties going on. Recent initiatives to improve quality and vehicle launches are paying off and are expected to help bring down future warranty costs. So they got quality issues of their vehicles causing them problems with warranty problems, and they're saying that they're fixing the quality going forward. Well, what I would say is don't buy a Ford from 2021 or before, because it seems like they got some issues with those vehicles. And, you know, I'm jumping around, but nonetheless, yeah. So they got issues, to say the least. Now, we jump to Jeep Stellantis. Jeep, Dodge maker Stellantis, reports 48% drop in first half net profit on weak U.S. sales. Now, it is interesting, right? When you go to the GDP numbers, what did we just talk about? It was driven by durable goods like cars and furnishings. Okay, so maybe we're getting a little bit of a change here. But nonetheless, what's been happening with the car makers? The car makers have been having weak performance. Well, maybe that's about to change if GDP is growing because durable goods are now coming back versus services. But nonetheless, first half net profit, 5.6 billion euros, down 48% from the same period a year ago. That's a tough one, man. What is their symbol? STLA? STLA for Stellantis, which makes Jeep, down 8.6%. Now, here's what I'll say about this company, okay? That is quite a chart. Number one, you put this on a weekly. Let's put it even on a monthly. Look at this thing, man. Car makers, you're back to where you were 2018. Now, I mean, Jeep's got their own ecosystem, right? The Jeep fanboys across the world, across the country at least. But what is interesting, those new Jeep Grand Cherokee, all that stuff, super expensive for the vehicles that they are. You're talking about $110,000 from some of the top-end SUVs they have. And I don't know if Jeep has the brand name to sell a vehicle at $110,000. I know that's quite a market. They're trying to get into it. But as somebody that would love a 3-row SUV, I've had this conversation before. I think my favorite out there is the Yukon Denali. Man, that thing is sweet. But again, can't pull the trigger for $100,000 or $110,000 when you can put down, 30 to 40% on a home for the same exact price. And meanwhile, you got vehicles like the Kia Telluride that pumps you out a 3-row SUV with, captain seats in the second row for about 45 or 50 grand, brand new. It's a tough market. They would love to sell vehicles at 100, 110 grand. I think they tried to make that happen, seeing the type of profitability that they may be able to incur at that type of a price point. But boy, the stock price is saying not exactly what you may have hoped for when you're driving from $29.50 down to $17.92, and that is quite a red bar on their earnings right now. The only thing that I will say is those GDP numbers, talking about durable goods, back in vogue as one of the factors driving growth on GDP right now. Yeah. All right, now let's talk a little bit of streaming and sports. Why not? So the NBA is moving to Amazon Prime. Now, Amazon, they're up by 0.5%. All right. I wonder if this has to do with that deal at all. I mean, they're getting some headlines for sure, but probably not a huge factor in terms of that company and where they're going. But it is a huge factor when you think about the landscape of streaming changing. Now, the interesting part is TNT, which is Warner Brothers Discovery, okay, they lose the NBA. They're down 6.3%. That might be part of it. I'm sure it might. Yeah, I mean, look at the headlines, right? NBA chooses new broadcast partner, Warner Brothers stock falls. So it's going to be a lot more important to a company like Warner Brothers Discovery than it is to Amazon in terms of the number of components that contribute to the value of that company. But it is interesting how this plays out. So, you know, you got the NBA on TNT, and even I'll say, man, I'm not a huge basketball fan, but even I enjoy that pregame sometimes. There's nothing like Charles Barkley out there, okay? And it will be interesting to see in terms of if they try and put together a similar show on Amazon. Now, they have one more full season, okay? So one more full season on TNT, and then the new media deals come in, and that's when Amazon's going to be a player, and they'll have the NBA. There's nothing like the NBA globally. That's the other thing, folks, okay? The NBA is a global sport. That's why NBA players are making $60 or $80 million a year coming at you, because they are a global sport versus many of the sports that are just North American sports, okay? And it is interesting how it comes down, though, okay? So here you get this headline from only 2 or 3 days ago, okay, that Warner Brothers is going to match the Amazon Prime offer for NBA rights. And that match was going to be $1.8 billion per year that Amazon made, okay? Turner has had an NBA package since 1984, and games have been on TNT since the network launched in 1988. Think about that. You're talking about 36 years they've been on TNT. So it is quite a shift in that dramatic fashion when you think about it, okay? And what it said is that they are going to match. Now, the NBA's Board of Governors approved the league's 11-year media rights deal with Disney, NBC, and Amazon Prime Video at their meeting in Las Vegas last Tuesday. And that deal, collectively worth $76 billion, going to begin, as I mentioned, not this coming season, the season after, 2025, 2026. And they include a game being aired or streamed nationally every night during the second half of the season. Every single night. The NBA is something, man. World champion Boston Celtics, by the way, out there. Now, what's interesting is, so this story comes out, right? And it says Warner Brothers going to match it. They're going to match it. Everyone says, oh, the NBA on TNT, it's going to stay. Well, guess what? That was a lot of talk. The NBA announces TNT and Warner Brothers did not match the agreement with Amazon Prime. And somehow TNT vows to take, quote-unquote, appropriate action. Yeah, good luck, man. If it was more money, they would have went with it, okay? That's not the case. My guess is they didn't match it. The league said in a statement that TNT's parent company, Warner Brothers, did not match the new 11-year, $1.8 billion annual contract the NBA agreed to with Amazon. So it seems like they got an opportunity to match it. They did not match it, and TNT issued a response to the NBA declaring in the statement that it doesn't believe the NBA can reject its offer, and it vowed to take appropriate action. From the little I know, it doesn't sound like TNT is on the up and up, because if they had matched it, or if they, they would have taken it probably, and they did not. Who knows? Maybe they want to be with Amazon anyway. Nonetheless, NBA on TNT, allow one more season. Amazon reaping the benefits. We'll be right back, folks.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got a little bit of volatility on the opening bell. You had the NASDAQ 100. Check it out. On a 5-minute basis, you dive down to almost 19,100, or right back, you were down almost 100 points, just like that, man. We get it back on a 5-minute basis. We're basically down by less than 0.1%. S&P's off by 1. You get the Dow and the Russell in positive territory. You could make the case that the rotation continues with the Russell up by 0.6% right now, up by 13 points. Pretty strong action. We jump to crude, off 74 pennies right now. We keep our eye on gold. Gold off $46 right now, trading at $23.68. And notes and bonds, yeah, there's a little bit of volatility on that news at 8:30. You see, there's the 8:30 bar. Okay, so what did we get happen on that 8:30 bar? You had lower price, higher yield, correlating, I should say, with the growth numbers. You got bigger growth numbers, you're going to have a bigger yield in theory. Okay. Now, what's interesting is we've talked about this one before. We jump over to the FedWatch tool. Now, again, not the holy grail, but just one factor to give you an indication of how this market is pricing in the probability of cuts coming down the line. You go out to September, and there's basically a 100% chance that we're cutting. Interesting, the market is pricing in that there's actually a 12% chance, still a tail risk, okay, that we get a 50 basis point cut by the time we get to September. And that could either be 25 coming down the line in July and then September, or just 50 basis points right in September, depending on how this economy is looking by then. We really get some weakening. I don't know if that's going to happen when we just got a 2.8% GDP print. But nonetheless, okay, it is interesting that you're talking about now there is a 12% chance that we get 2 cuts, 2 quarter-point cuts by the time we're at the September meeting. And just for some context of where we are by December right now, by December, okay, by December, the market is looking at a 56% chance that we have 75 basis points of cuts by December. And that would mean that you could go 25 in September, 25 in November, 25 in December, right? There's only a 34% chance that we get 2. Maybe you go September, you skip a meeting in November, and you go December, right? There's only a 3% chance that they get 1 cut by December. And on this graph is not even staying where they are, and there's actually a tail risk of 6% that we are a full point for That would be July, September, November, and December, or maybe 50 somewhere in the mix. So keep your eye on that as the market right now pricing in. The cuts are coming down the line, and it's really pricing in a tail risk that somewhere we might even get 50 basis points if things get a little dire and the Fed says, you know what, we might be a little late to the party. Let's go 50 here. I don't think so, but it's important to see what we have going on in terms of potentially being priced in to some degree. All right. We take a look at Disney. You talk about a dog recently, this thing. Disney flat on the session at 89.89, quite a pullback from 123. Okay, you're coming back into the lows of the beginning of the year right now. And what is remarkable is you talk about numbers, man. Oh, that's not it. How about 1.46 billion? You put out a good movie in this day and age, 1.46 billion. That is what Inside Out has surpassed for global ticket sales. The highest grossing animated feature of all time. Frozen 2 was the biggest one out there before. Now this one's going to keep going. Hasn't even opened to Japan. And Inside Out 1 in 2015 did 850 million. 33 million of that was in Japan. So maybe you're going to add 50 million or something like that. You're probably going to hit the 1.5 billion mark for global ticket sales. And yeah, that's quite a number. Before Inside Out 2, no Disney animated feature from Pixar or its studio had generated more than 480 million at the global box office since, well, 2019. It's been quite a woe. Yeah. And they do not consider the 2019 Lion King to be animated. Yeah, they remade that in a digital fashion, right? It was a live action remake, I guess they call it. So that grossed 1.6 billion during that theatrical run. Nonetheless, we haven't seen it yet. We have watched the Inside Out 1 on Disney, which is a good one. Tommy enjoys that one occasionally. Not a huge fan favorite, but we do enjoy it. We've watched it. But Inside Out 2, we'll have to check it out when it comes to streaming. 1.5 billion. And yeah, and tonight I think it is, you got Deadpool and Wolverine. But not exactly helping Disney, man. Not just yet. You had Disney trading lower this week on Comcast with their numbers disappointing for Universal, the parks, and Disney. Whew. The one thing I will say is, I mean, you're back into an area of potential support. That $85 area here, it's where you gapped above on the earnings. Yeah, almost a year ago, back in November of last year. You gapped above. You gapped above again on the earnings of February. You pull all the way back. And on a longer-term basis, three-year weekly, you can see that we are in that lower range, man. So longer term, Disney's going to be just fine, man. There's only one Disney World, folks, and their movies, when you can make 1.5 billion by pumping out a digital movie, and they got some movies coming down the line in 25, especially 2026. They got a couple of Star Wars movies down the line. They got an Avatar movie coming down the line. So look at that monthly, though. How many of these equities, right? We just looked at the airlines. It is remarkable how many equities on a 10-year basis just go flat. Whew. Remarkable. All right. What else we got to take a look at in terms of headlines out there? Let's see. Yeah, weight loss drugs, man, they are everywhere. Viking Therapeutics stock jumps 20% after drug maker moves weight loss injection to late-stage trial. We live in interesting times. How about Berkshire? Yeah, they're dumping Bank of America, man. We jump over to Bank of America this morning. Down about 0.1%. We take a look at this thing over a 3-year weekly. It's been on quite a run, and maybe he's seeing this as an opportunity to get out of Dodge. Quite a price for Bank of America, up to $42. But Warren Buffett and Berkshire, they dumped $2.3 billion in a 6-day sale for Bank of America shares. Yeah, $2.3 billion. They sold another 18.9 million shares via transactions on Monday, Tuesday, and Wednesday at an average price of $42.46. Wow, you can see it, folks, okay? $42.46, right? We were just trading at $25, okay? He's seeing value in selling those shares, and pay attention when that's the case, man. Market cap of $41.3 billion. Whew. They still own 980 million Bank of America shares. Pretty remarkable is their number. And they have Look at that. So 12.5% is what they own of that company still. They unloaded 52.8 million shares, but they still own 980 million. A far distant second to their largest holding, which is Apple. Quite a number. All right, we talked about Southwest. Yeah, we talked about American as well. American shares, we keep our eye on them. These airlines, they're up 5.5%. On their numbers, look at that, catching a bid, man. Not sure what they're talking about on the conference call, but the market likes it. American up by 5.7% after diving lower this morning on their numbers. We check out Southwest, how the market's reacting to theirs. Look at this. Maybe the market's finding a bid for airlines. Southwest up by 2% after diving. American trading higher. Number of United shares up by 3.5%. They're buying the airlines this morning. Even JetBlue up by 2.7%. Stay tuned, folks. One more session. We'll finish up the program. Don't go away. We'll wrap it up.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the market slightly in the red. S&P's off by 8 right now. NASDAQ 100 losing another 0.5%. We're off 111 points right now. We're testing the pre-market lows at 19,095. Dow catches a bid up 159, and the Russell continuing to shine. The Russell right now up by more than 1%. Check it out, right? You got the NASDAQ diving lower. Russell catches a bid. Russell up by 23 points, up by more than a full percent right now for the Russell. All right, folks, you heard the ad earlier in the program. My dad, he's doing a live trading event 8 days from right now. That is Friday, August 2nd. We got a market, man. We got a market. That's, as the ad said, we got a two-way market, man, for sure. After this market just trading higher nonstop, we got a little volatility right now. He'll be hosting that live trading event a week from this coming Friday. Don't forget about Larry tomorrow. Larry Live Trading Fridays. You can check that out. We got my dad coming up a week from tomorrow. Live trading event. He's going to be in there trading the SPY, the NDX, the SPY, okay, the Qs. He's going to be trading 0 days to expiration options. If you've traded them, if you're thinking about trading them, folks, I encourage you to check it out. Phenomenal deal. The cost is $295. You get a month of his newsletter, which is $169. You get a signed copy of his book sent to you. We'll mail that to you. That's an $88 value. Okay, you're in there from 9 a.m. till 12 noon. He's going to show you how to set up those trades, how he trades the opening bell, best times of the day to trade. He's going to talk about A to B, C to D, price expansions, Fibonacci expansions, okay, what kind of risk reward you're looking for, how to use price and volume when trading intraday. I encourage you to check it out. Three hours of live trading with my dad in there a week from tomorrow. Check that one out. And don't forget about Tiger Dollars. You sign up for Tiger Dollars, you get your bonus, man. Apply those to whatever you want to use at TFNN. And we'll wrap it up with this one, man, a modern-day story of succession. Interesting one out here. Rupert Murdoch and the kids, they're battling it out. And it is interesting. It's right out of Succession, man. If you haven't watched Succession, outstanding program on HBO, check it out. He's trying to reorder the trust to make sure that Lackland gets all the control. And he's saying that the reason why he's doing it because it's the best for everybody. That's an interesting one. I wish I had more time to check it out. I don't know, it's right out of Succession. All right, folks. Appreciate you tuning in. Stay tuned for Basil coming up next. Have a great Thursday. We'll talk to you tomorrow, folks.